Hi everyone, welcome to our Fleet Mortgages webinar today. My name is Regis. I'm one of the key account managers at Fleet Mortgages, and we heard the feedback from the street was that Christmas just wasn't going to be Christmas unless you had one more Fleet Mortgages webinar. So we're happy to oblige today and give you that perfect end to the year by giving you that one more webinar from Fleet. In terms of content and agenda, we're just going to look at all of the stuff that's probably not going to surprise you. We're going to look at who are Fleet Mortgages. What exactly is it we do? I'm going to talk to you a little bit about Starling Bank. Starling Bank acquired Fleet Mortgages back in the summer, so what does that mean for you guys out there advising your clients? I'm then going to hand over to Katy Williams, who's our Midlands BDM. She's got some case studies to go through with you where Fleet was able to offer a solution to the broker and their clients. I think it's only fair Katy gets to do that for two reasons really. One, she's actually helped with some of these cases, so it's only fair she gets to talk to you about them. And also Katy's got all that technical knowledge that I'm still learning after joining Fleet back in the summer. So rather than embarrass myself and go through the case studies myself, I've roped in the kind support of Katy to actually go through the more technical stuff when it comes to those real life scenarios where Fleet have helped. And then Katy will hand back to me. I'll just remind you how to get hold of the sales team, the BDMs, if you do have any cases or you want to chat anything through, or you just want to learn more about the opportunity that there is out there in the buy-to-let market. Maybe it's something you've not done much of in the past and you just want to speak to somebody who knows what they're talking about. So I'll let you know how to get hold of those guys as well. So I'll bring up my slides because that will help remind me exactly what it is I'm going to talk to you about today. So Fleet, who are Fleet? We are a specialist buy-to-let mortgage lender. We've been around since 2014. One of the biggest strings on Fleet's bow is the people. We've got a very experienced exec team, management team, operations team, highly experienced sales team. The field BDMs, the telephone BDMs really know their stuff, and they're supported by a fantastic sales support team as well. So one of the things that struck me when I joined Fleet back in the summer was just the level of expertise and knowledge within the team, and they've been helping me greatly over the last 6 months learn an awful lot about buy-to-let and the market. So as I've already said, if you want to find out more, definitely reach out to your local sales guys and they'll help you. They know what they're doing, they know what they're talking about, and they will be able to help you find more business like this. In terms of products, we have three distinct ranges at Fleet. We have a standard buy-to-let mortgage product which is aimed at your individual borrower, so the property is still in the individual's name, the landlord's name. We have a limited company and limited liability partnership range, so that's where the ownership of the property is sat within a corporate entity, within an SPV, such as a limited company or an LLP. So we have a range specifically for that type of borrower, and then we have a range of products that's aimed at your HMOs and multi-unit block type properties. So that's your more professional landlords who are operating in that slightly more complex side of the market with the houses of multiple occupancy, etc. So those are the three distinct ranges of products that we have at Fleet. Criteria, we do have pretty flexible criteria, and that is why we do win a lot of business. It would take me all day to run through all of our flexible criteria points, and I'm sure you'd get incredibly bored if I tried. So what I've done is cherry picked 4 criteria points that seem to come up more often than some of the others, and reasons why brokers might be recommending Fleet rather than another lender. So we'll just quickly run through them. We can have up to 4 applicants on an application, but we only underwrite applicant number 1. So in terms of their income, in terms of if they've owned property before, we're only looking at applicant number 1, but we can have up to 4 applicants on the application. We have no owner-occupier requirements, so when the application comes in, the applicant does not need to own or live in their own property today. They do need to have owned a property in the past for at least 12 months, but they don't need to be an owner-occupier today. Our minimum income criteria for experienced landlords is £15,000 per annum, but that can include rental income. For an inexperienced landlord, a first-time landlord, our minimum income threshold is £25,000. But more often than not, it's experienced landlords we tend to be looking at Fleet anyway, and we can accept that rental income. And in terms of applicant age, minimum age is age 21, but maximum age of the applicant when the mortgage term ends is age 95. So we can look at those older landlords who maybe struggling to place their case with some of the other lenders out there due to their age. As long as the term isn't going beyond the applicant's 95th birthday, we can still consider that case as well. So hopefully that's given you a little bit of a flavour for some of the flexible criteria that we have. Like I say, the list is endless, and the sales guys can talk to you more about some of the other flexible criteria points if you want to learn more, and I'll tell you how to get hold of them at the end of the webinar. Another reason why you might look to recommend Fleet or be seriously considering Fleet as a solution is our service levels and our speed of service. We're pretty much famous now out there in the buy-to-let market in this space for the speed at which we process applications, and also the fact that everything's online, so online registration, online DIP submission, online application submission, all your case tracking can be done through the portal as well. But we turn pretty much everything around that hits our desk within 24 hours. Obviously, things like valuations, waiting for a valuer to go out and value the property, things that are outside of our control to a degree, can add a day or two onto the process, but anything that's come back to us and hit our desk, we're turning that around within 24 hours at the moment. So if you've got an application that's got quite a strict deadline, speed is key, time is of the essence, then definitely think Fleet, because we are very, very efficient, very, very quick. And then the last thing I want to talk to you about before handing over to Katie is the recent acquisition of Fleet Mortgages by Starling Bank. The short version of what that means for you guys out there advising your clients is that our rates will be coming down. They've already come down over the last couple of months a couple of times. You're likely going to see that continuing. You'll see Fleet's name moving up the old pricing tables. So we should, in early 2022, have that good cocktail of decent service, decent criteria, flexible criteria to be able to place the cases in the first place, and also good pricing, decent rate, which is probably the one thing, if I was to list the feedback I've had since joining Fleet, the one thing I've heard from a lot of brokers is fantastic service, brilliant criteria, but just a little bit too expensive. So that will be changing. It's already changed to a degree, and it's going to change even more as we move forward into 2022 as well. So on that note, what I'm going to do is hand over to Katie now, who's going to run through some case studies with you and just highlight, hopefully bring it to life, highlight how Fleet have been able to help some real life clients out there. So I'll speak to you again shortly.
Hi everyone, thanks Wes. My name's Katie and I'm the Field BDM for the Midlands region for Fleet Mortgages. I've been asked today just to run through a couple of our case studies. What it is real life customer scenarios that have been faced by our broker partners. So these are real life scenarios, not ones that have been made up, so it's just to kind of bring to life our criteria and how that fits for you in real life terms. We'll cover the challenges that can arise with these particular scenarios, key considerations that you need to think about when trying to find a lender, and then ways that you can overcome these challenges and find solutions with our flexible criteria and our common sense approach to underwriting. So the first example that we're going to go through is in relation to capital raising. So in this particular instance, we had an advisor that needed help with a customer that wanted to remortgage a property. They got tenants in the property and they'd been in there for 8 years, and they were looking to capital raise to grow their portfolio to buy more property, which is quite common, but they hadn't yet found a property, so there was no onwards purchase. Problems in this particular instance, so the AST on this property was arranged every 2 years, so looking at 24-month AST. They were excellent tenants, so there'd been no rent rises in 8 years. They were looking for a lender that could maximise the amount of capital borrowed, and to do that they needed us to look at using market rent and not rent received, and they didn't have an onwards purchase address. So firstly, a couple of things that we can cover off here. In terms of ASTs, we can accept ASTs up to 36 months in length, so an AST every 2 years is absolutely fine. We will also use market rent, not rent received. So for a lot of our clients, they are portfolio landlords. If you've got good tenants in the property, then why would you look to put the rent up? So in this instance, we can use market rent rather than rent received. So the landlord in this instance was receiving £750 a month, but they could actually get £1,000 a month on the open market rental. So we would base our ICRs on £1,000 a month. They'll also be able to maximise the amount that they can borrow with us. Our ICRs are generous, so they're 125% regardless of tax banding, and that also applies to limited companies, HMOs and multi-unit blocks. And you'll be looking at 125 at 5.5 or 125 at pay rate on a 5-year fixed. So with us you'll be able to borrow a lot more than you can with most other lenders, particularly for high rate taxpayers, because you'd be looking at a stress rate starting at 140, 145. And particularly, we know a lot of lenders can do 5-year pay rates, but on a 2-year fixed, not all landlords want to fix in for 5 years. It's quite a long time, particularly if they've got plans to redevelop or extend their portfolios, and also bearing in mind the EPC changes that are coming in 2025, 2026, you need to be aware that they might need to increase the energy performance of the property, so they might be looking to capital raise for that in the future. So not necessarily looking to fix in for a full 5 years, might be just looking for a short-term fix of 2 years. So with us you will get 125 at 5.5, and it means the landlord could look at options that don't involve being tied into ERCs for a long period of time. Just more generally speaking, in terms of capital raising, what we can do, so we can lend for any legal purpose, so anything is open to consideration, as long as it's not a personal tax bill or a gambling debt. So that does include extending portfolio. So if you've got a client that's looking to purchase land or property, we don't require an onwards purchase, so we are happy for the applicant to put the money into the bank, keep it in savings and go out and buy in the future. This is particularly popular at the moment because property values are high, so a lot of our landlords are looking to gear up and release the additional capital, and then use it and go out and spend potentially when house prices have cooled off a little bit, or potentially dipped depending on what happens going forward. We can also lend for business purposes, so that might be cash injection into an existing business or purchase of a new business. We can look at those. Debt consolidation, both personal and business debts, and then also property refurbishment. So any legal purpose apart from gambling debts or personal tax bills. We will consider IHT and CGT as well. So anything that you can see there we can look at. We don't restrict our LTV for capital raising for any purpose, so depending on the property type you can go to 75 or 80% maximum regardless of what the money's been raised for. The second case study that we've got is just around properties above commercial, so this also applies to properties adjacent or opposite to commercial as well. In this particular instance, the advisor in Reading had a customer that wanted to purchase a property in Hertfordshire. It was a flat and it was above a Domino's pizza. So as you'll already know, most lenders won't lend above takeaway outlets. So just in general terms, the market, any lending above smellies like restaurants or takeaways, a lot of lenders have got a clear blanket no approach, so they won't even consider it. Other popular types of commercial that are particularly difficult to place as well include pubs and restaurants, laundrettes, hairdressers, so anything like that. The concern is around potential resale issues, so whether in the event that repossession was to take place, would that asset be able to be resold within a quick enough time as the lender. Also, if you don't particularly like pizza, then you might not be attracted to live above a Domino's. So they're all things that you really need to take into account. So Fleet's approach to lending above or adjacent to commercial properties. So we will consider properties above most commercial units. That does include restaurants and takeaways. So really any particular type of commercial property we don't rule out in our policy. So we can consider any type of commercial. It is subject to valuer's comments, so with this it's a difficult one, I know, for advisors, but ultimately it comes down to that particular property, that particular area and location. Is there sufficient demand? Would there be sufficient demand in the event that we repossess and resell the unit? So that's really what we're relying on the valuer's advice and the valuer's comments for. So as you can imagine, in this instance, some properties they won't be acceptable security, but by not having a blanket no approach, it does mean that we can consider a lot of the different types of units that other lenders would say no to. Particularly handy if you've got clients that are looking to remortgage. They might be on a high SVR with another lender, might have very limited options in terms of remortgage choice. So for us, we will look at any particular type of commercial. It is subject to a couple of things. So the minimum value is 100,000 and the maximum LTV we can consider is 75%. But one of the big benefits with this type of property is that you will get a free valuation. So if it's a standard let property, so not HMO or multi-unit block, you will, up to £500,000, you'll get a free valuation. Anything over £500,000, you will get a discounted valuation. So in terms of upfront risk to the client, there's a £150 application fee, but they're not going to have to pay out for the valuation. So if it is something they really need to remortgage, or they really want to purchase and you're struggling to find a lender, then we're definitely an option for you to consider and bear in mind. And like in this example, we have lent above a Domino's pizza, but we've also lent above Thai restaurants, chicken shops, hairdressers, laundrettes, so all of the ones that are typically difficult to place. Okay, and then this final case study is just around limited company SPVs. So this accounts for approximately half of our overall business, and year on year it is a growing sector of the market. You'll see that more lenders are coming into this space now because it is becoming more popular. Many reasons that limited companies are popular, but mainly it's down to taxation benefits with the change in PRA rules. But as far as limited companies go, so we will lend to SPVs, special purpose vehicles. In this particular instance, the consultant had a client with an SPV. That SPV was wholly owned by a parent company. So you've got the SPV company, and above that you've got a holding company. The SPV itself, so already held buy-to-let properties, and it also had some commercial premises within it as well. So it's a mix there of residential, buy-to-let and commercial. And they were looking to purchase another buy-to-let in that same SPV. So the problems that were faced, so as you know, so some lenders will require an SPV to be standalone, so it purely needs to be for buy-to-let residential purposes, no commercial. So in terms of lending within the SPV itself, because this SPV already had other properties, they were also struggling with the stress test of the background properties, and they were struggling because some lenders will require the SPV to completely stand alone, no holding company sitting above it. So with fleet mortgages, we can accept brand new SPVs day one. So if you set it up on company's house and it showed this morning, then we can lend to it. But we can also look at existing SPVs and subsidiary SPVs as well. We are able to lend up to 80% LTV to a loan of 750k with a minimum value of 100,000 if you want 80%. This is exactly the same as on our standard product line. We could do 75% up to 1 million, 70% 1.5 and 65 at 2 million. So those loan amounts, they apply to all our standard products as well. As I've mentioned, limited company SPV is becoming more popular, particularly for your high rate taxpayers because of the differential in the way that their income is taxed. Also gives them some control over as and when they take their remuneration. But there's also potentially issues around legacy planning and protection, so different benefits to different clients for SPVs, but they are becoming more popular. With an SPV, they'll be able to benefit from our ICR of 125% at 5.5 or pay rate, as I mentioned earlier, regardless of tax banding. We will accept up to 4 applicants on all types of application, so not just limited company itself. If it is a limited company, we would need all directors named on the company to go on our application, and any applicant that's got 25% or more shareholding, and the application needs to capture 75% in total. So we do now have the ability to ignore minority shareholders. So for instance, if you've got adults and they've put their children on the SPV as, say, 7.5% shareholders, as long as mum and dad are the sole directors and they have 75% shareholding between them, we can then ignore the minority shareholders, which may be minors or people that don't fit within our criteria. As we can see, a lot of existing landlords are incorporating, moving into limited companies now, dependent on the tax advice, so we can look at an incorporation. And we're also happy to capital raise to cover any capital gains tax or stamp duty liability that might arise from that transaction. Where we're particularly strong from a limited company perspective is, although we can't lend to a trading company directly, if your client has got an existing trading business, then we would be happy for them to do an intercompany loan for the source of deposit. So rather than them take a dividend and then pay tax on it, they are able to loan money from one company to the SPV, and that can form the deposit. Benefits of that is that as long as one person matches on both the SPV and the loaning company, we don't need it to mirror exactly. We would just get a articles of association just to confirm that any other directors or shareholders are in agreement for the loan to take place. If they want to put the cash in from their own sources, again, a director's loan is absolutely fine for a source of deposit. And you can use a desk calculator, so it's very easy to figure out what you can borrow with us. But we do have a really helpful, useful calculator on our website you can use if you need to calculate maximum loan amounts. And that's everything from me, so I'll hand back to Wes now. Thanks very much for your time. Any questions, please feel free to get in touch.
Thank you, Katie, for running through all of those case studies for me. That's much appreciated. Hopefully you got something from that. Maybe it's reminded you of another case that you've been looking at recently. So the last thing for me to say today is thank you for dialing in. Thank you for watching. And if you do want to get hold of your local BDM or you want to speak to us at Fleet, then if you look down the bottom of here, down the bottom of the screen, you can see our telephone number, email address and website. So jump on any one of those if you want to have a chat with us, and we'll tell you more about what we're up to, how we can help, and help explain the market, the opportunity, anything you want to know in regards to buy-to-let and complex buy-to-let. So definitely reach out to us, come and speak to us, and we'll do our best to help. Thanks again for watching. Have a great Christmas, have a great New Year, and no doubt we'll catch up in 2022. Thank you.